What's up, everybody? Stacking Surfer here, your go-to source for all things gold, silver, and platinum. And today we're going to dive in and talk about gold. All right, so recently prices for gold hit all-time high ever priced in US dollars, and then we had the price come down. We're going to talk about it. Was it a dip, a pullback, a correction, or a crash? Are we about to see gold go straight up, or are we just getting started with it going down? We're going to talk about that today, and if you stick around until the end, I'm also going to give you tips on how to stack better when you're stacking gold. Hit it. Surfer. I think I'm your best friend. Balances in your bank instead. All right, so 2025 has been quite the ride for gold, especially the gold bugs that have been holding for a long time. We've seen gold go all the way up to around $4,400, and then quickly after that, we saw it go down to $4,100. Now, in my book, it's not quite a pullback, because I look at those as being about 10% or greater, and I look at corrections being 20% or greater, and I look at crashes being 30% or greater. But this is definitely a dip, but it felt a little deeper for most people. So what do you guys think? Leave me a comment down below. Did we have a dip, a pullback, a correction, or a crash? I want to hear what you guys think and kind of your philosophy on it. But could we go higher this year? Could we see $4,400 gold again? Could we see $4,500 gold? Could we see $5,000 gold, or maybe even higher? We're going to talk about that, but we're also going to be talking about what other analysts are talking about as well. So we recently had an analyst from Bank of America come out and say $5,000 gold is not crazy this year. We've also had Jamie Dimon from JP Chase talk about $10,000 gold during this run. So that's crazy. What do you guys think? Let me know down below. So what are you doing? Are you buying, are you holding, or are you selling? I talked to a local coin shop today, and they said they're still seeing more people selling than buying. However, I know it's getting harder to find certain products. Eagles are going up with a $200 premium on gold Eagles, and I think it's about a $10 or $15 premium on some of the silver Eagles too that you're starting to see. Constitutional silver is dirt cheap right now, and you might even be able to pick it up below spot. So we definitely have dynamics that are happening here that are interesting. So I'm looking at this, and we also have a situation where we've had silver recently leaving the COMEX and being flown over to the LBMA to try to save it from a silver crash, okay, or a silver squeeze, many people would call it. It looks like that might have been averted for now, okay, but could we see silver? Could we see gold go lower? Well, we're going to talk about gold mostly in this video, but we might mention silver a little bit. But yes, I think gold could go a little bit lower, but I don't think much lower. We haven't tested 4,000 yet, but we also haven't tested most of the levels that we've passed all the way up to $4,400. So it's also very possible that we are not going to go back down to 4,000. We're just going to continue running higher. So what do you guys think? Let me know. But I think that we could go down a little bit. I'd be surprised if we go much lower than, say, 3,800 bucks. I don't think we're going to test the 200-day moving average. We haven't been doing that. That's not the trend. And when I look at the charts, to me, it looks like we're going to continue to be going up. Many are saying that just in the next couple days here, into the next couple weeks, we could see gold going back above $4,100 on its way to $4,500. I still think that we could see $4,500 gold this year, and I think it's very possible for us to see $5,000 gold if the circumstances are right. The Fed is meeting next week, so watch out for that. If they go ahead and lower the interest rates by a quarter point or 25 basis points, we should continue on the trajectories we've been on. If they go to lower it more, say 50 basis points or half a point or 0.5%, we could see it really start to make gold lift up and take off. When we look at the polls, they're showing that it's a 95% probability that the interest rate's going to be cut by 25 basis points or a quarter point. So what does that mean for us? Where is that going to take the price of gold? Okay, so I can't guarantee that we're going to have much more of a pullback and that we're going to see gold go down into the 3,000s, $3,500 or even $3,000. The trend has not been for it to go that far back after it runs up. I think we've had a drop that is equal to the bounce, let's call it, that went up. So I can't guarantee that's going to happen, and because of that, I always recommend dollar cost averaging. Buying when you have a pullback a little bit more than buying when we have a bump in price. but I like to spread that out so that I can even out a little bit more the actual price I'm paying for gold. The other thing I'm looking to do right now is, as I dollar cost average, because I am still buying gold right now, I'm also looking to add to my mining portfolios, okay? So some of you may have mining stocks today, gold and silver miners. Some of you may not, and you may be considering what to do with that. I have had incredible returns from my mining stocks so far this year. It's kind of blown my mind a little bit, and I wish I had put more money into it. Before I dive into the best ways to buy gold, I want to introduce you to tonight's sponsor, GoldMining Inc. With gold being over $4,000 and with silver being over $48, right now the metals and the mining stocks are red hot. We've had an awesome opportunity to buy the dip. So I want to introduce you to GoldMining Inc. You can find them on the ticker symbol GLDG. Let me tell you a little bit about them, and hang on to the end so that you can get those tips on how to buy gold and how to get the best prices possible out there.
Major players like VanEck, Ruffer, Goldman Sachs, and Sprott hold positions in gold mining. As of October 21st, 2025, gold mining's market cap is $292 million, with equity holdings and cash worth $226 million, excluding its massive exploration portfolio and a uranium project in Canada's Athabasca Basin, plus it's debt-free. Gold mining holds stakes in 4 companies, 2 of which nearly tripled in value in 2025. Its portfolio includes over 10 projects in pro-mining jurisdictions: Canada, USA, Brazil, Colombia, and Peru, with 12.4 million ounces of gold equivalent measured and indicated, and 9.1 million ounces inferred. Gold mining is advancing 4 key projects, notably the San Jorge project in Brazil, where a major exploration program began in May 2025. This project has a 1 gram per ton open pit resource on a 46,000 hectare, which is 115,000 acres, land package with growth potential. With major producers depleting reserves, gold mining's large-scale gold and gold-copper projects in mining-friendly jurisdictions are prime targets for reserve replacement. With insiders owning over 10 million shares, gold mining aligns with shareholders. For exposure to gold prices and robust project pipeline, check out GoldMining Inc. on the New York Stock Exchange GLDG. Review their filings at goldmining.com or setterplus.ca for full
Big
details.
thanks to our sponsor tonight, GoldMining Inc. Guys, let's talk about how to buy gold now. You stuck around until the end. I'm going to give you my tips. I'm going to tell you what I'm doing, and I think you're going to enjoy this. So first, what I like to do is create a strategy. So what's the point in buying gold for me, for my family? Am I buying it to pass on to my kids and my grandkids? Is it multi-generational? Am I buying because I believe inflation's going higher and I want to have a hedge against it? Am I buying because I believe gold's in a bull run and it's going to go much higher? Well, let's break that down just a little bit on the allocation, and then I'm going to tell you why I'm stacking gold. So first off, when it comes down to allocation, it really depends on your personal situation. Traditionally, if you talk to a financial planner, a lot of times they'll recommend a 3 to 5% allocation. Right now, we have Morgan Stanley coming out and saying a 20% allocation. I actually agree with them. Gold, silver, and platinum, okay? But I tend to have more gold, then I have silver, then I have platinum. Now, right now, with what gold and silver have been doing, I'm pretty excited about what I've put together, but I'm also considering, do I rebalance that a little bit? A percentage of your liquid capital, okay? So you take your house out of the equation and you just look at liquid capital. I still think now is a great time to buy. What do you guys think? Put a comment down below. If you haven't already hit the subscribe and bell icon, please do that now. That helps the algorithms, it helps the channel, it gets this message out there. Okay, so you guys stay to the end, you guys get the bonus tips, all right? So there's 3 tips here on buying gold. So the first one is dollar cost averaging. We talked about it briefly here, but really what it comes down to is it's taking your goal and your budget that you have, okay, and it's splitting it up. Now, gold's a little trickier than silver to do this with, okay, because of the price. Right now, most people aren't going to be buying an ounce of gold every, let's say, week, okay? So you got to look at the premiums. You've got to look at everything else into the equation. It's cheaper to buy gold in 1 ounce than it is in 1/10 ounce. However, because of the price of gold, I think it's okay. I'm still buying 1/10 ounces, as well as 1 ounce coins when I can. So I kind of spread that out a little bit. But with my dollar cost averaging, let's say I have enough budget for the year to buy 4 ounces of gold. A lot of people have done some research on this, and it turns out that it's actually better, especially if gold keeps going up, to buy 10th ounces consistently over the year versus waiting every 3 months to go buy an ounce of gold. But I wouldn't be afraid to buy 10th ounce gold coins, and I wouldn't be afraid to stack those even though the premiums are higher. I see gold going quite a bit higher, and I think you're going to still be happy that you purchased it versus waiting a year. Okay, so tip number 2, shop around. When you're buying gold or selling gold, it's really important to get bids, okay? Sometimes I forget to do this because I just go to the places I know and I trust. But believe me, it's important to go get that because even your favorite shop may not have the best price for that particular item you're trying to buy or the item you're selling. And ask them for their price. Ask them if they have it in stock, okay? Because that's also important. If they give you a lower price, but it's going to take 3 months to get it, I'd rather pay the bigger or the higher price and get it today. All right, tip number 3, buy the dips. What we just had, in my opinion, was a dip. Not a pullback, not a correction, and definitely not a crash, okay? Now, I'm curious to see what you guys answered earlier when you put a comment down below to see what you believe. But to me, this was a dip, and dips are great to buy. Pullbacks are also great to buy. Corrections are a little scarier because those often consolidate and take 3 or 4 months before they start moving back up. Crashes are really scary because once you have a 30% decline, you're just not sure what's going to happen. What are you guys doing? Are you buying physical? Are you vaulting? Are you guys buying paper gold? Or are you buying mining stocks? I'd love to know down below. Leave me a comment. And what are you buying? What stocks are you guys looking at? What miners have been great for you this year? I think there's been many of them. I hold many of them, and they've been doing very, very well. Hit the subscribe, hit the bell icon, and the thumbs up so more people see this. Stay safe, and until next time, peace out.